everyone. Thank you again for joining us on our Achieving the American Dream podcast. Today we're filming at our new Crystal Lake location. We moved from Algonquin to Crystal Lake. So we have a nice studio here out front. We hope you visit us. And today we have George Broustis with us, and he is a reverse mortgage specialist here at RATE. And you all might want to, probably wondering what is a reverse home equity conversion mortgage. And that's why we have George here, because there's so many different uses of that loan product, and there's also some, I guess, bad, what do you call it?
Well, there's been some connotations about the reverse mortgage, and some, suffice to say, it's probably the most misunderstood product in the financial world.
Yep.
By the way, it's a pleasure to be here, Jerry. Thank you very much.
Yeah, well, thank you for coming. We really, really appreciate it. Yeah, I've grown up in the reverse business. My father was a sales manager for reverse for a local community bank, so I know enough to be dangerous. But George is the absolute expert at it. So, what are some of the different ways people can use a reverse? Because I think they think of it as the last resort product, or
yes, it's the most misunderstood and most underutilized product.
Right.
As you were alluding to, most people think that it's kind of a point of last resort. It's something when people have exhausted all other resources, and when they own a home, that a reverse mortgage is sort of the last resort. Now, truthfully, a big chunk of our business is needs-based, is people that life has gotten to be very expensive. It gets even more expensive for seniors between all of the healthcare costs, potentially insurance costs, and just the day-to-day living. It's a benefit when you have a home and you can tap into that equity and you can utilize that equity to kind of make your life better. I mean, that's really what it's all about.
Right.
And so when we talk about reverse mortgages, that's kind of what most people think, but they don't really know about all the different ways that they can use a reverse mortgage.
Yep.
And so maybe an example would be the best thing to do.
Yeah, absolutely.
Somebody that is currently living on a fixed income, like most of us at some point in time in our lives are going to be, they're paying a monthly mortgage payment, and it's eating into the amount of money they have to live and to survive and to do the things they want to do. And so we can oftentimes come in, use a reverse mortgage to pay off that underlying mortgage. And the beauty about it, and people say, why would you do that? Well, with the reverse mortgage, you don't have to make a principal and interest payment. It's an option. I'll dare say that 99% of the people that do a reverse mortgage don't pay principal and interest. They still have to pay taxes. They still have to pay insurance on their home and generally keep it in general good upkeep. But the money that they were paying for their principal and interest, they can now use for the other things that they may want in life. And it could be for whatever it is, whether they want to help out a child or a grandchild, or they just need the money for something in their home, or they want to make an improvement to the home so they can stay in the home the rest of their lives. Any of those things can be used for the reverse mortgage. And that's sort of the conventional wisdom of how you use a reverse mortgage. Pay off an underlying loan, use those proceeds for a better living in retirement. And that's really what this is all about. How do we get to have a better living in retirement?
Right. I mean, there is just so many ways. It just makes me think of a story of one that I just closed earlier this year. A veteran, he's about 88 years old. He's a diehard Sox fan, so that helped because I was able to get him some Sox tickets. He has an in-home health care, and he really doesn't really have any relatives. Unfortunately, he's got like a caretaker that comes to the house every day that he's been paying for. And his option was, now he was at the point where he was out of money to pay the caretaker, but there was a lot of equity in his townhouse, and he didn't necessarily want to go to a nursing home. He wanted to stay in his own home, right? So we were able to step in and pay off his current mortgage, so now he doesn't have to make a mortgage payment. But on top of that, we were able to get him a substantial amount of money, because he did have a lot of equity in his house, to put in his bank account to pay for this caretaker to come every day for the rest of his life. I mean, it's going to last for the rest of his life, until the loan comes due when he passes. And then if he did have heirs, it's not like the house goes to HUD, because a reverse mortgage is a HUD product. Mostly, there are other ones, but
Yep.
When that event happens, when there's a passing, and the oldest person in the house passes away, then the loan comes due, per se.
That's right.
But there's a lot of options when the loan comes due. It's not like the bank just takes the house. So did you want to kind of go over it?
Sure. I mean, and that's something where oftentimes we go, again, a misconception, right?
Mhm.
Is that we're loaning a percentage of the amount of money on the home, and then we take the home regardless of what happens. And that's not true. What happens is that when that person passes, they've gotten a monthly statement every month that says this is what you owe on your loan.
Just like any other mortgage.
Any other mortgage,
Yeah.
same thing. And so then the heirs of the person that passed away has an option to decide what they want to do. If they want to keep the home, they can get a new loan or bring cash or pay off the loan, however they want to do that. If there's a point where the amount of the loan might exceed the value of the house, which can happen in some instances, but not very often, they can buy the house for 95% of the appraised value, so they get a benefit from that. But in no way, shape, or form, if your client had been in the home, and let's say he did a reverse mortgage 30 years ago, and he was able to live in that home all those years, and the ultimate loan was more than what the value of the home was worth.
Right.
Nobody would owe any money other than, whatever was.
It's a non-recourse loan, they call it. So no matter if there is negative equity, no heirs are responsible for that. It doesn't come out of anyone's pocket. It's insured by HUD or FHA, the Federal Housing Administration. They insure this loan, and that's why they talk about reverse mortgage do have fees, higher fees than a regular refinance or a regular mortgage, and that's because of that insurance policy that's a part of it. But there's just so many different ways. That was kind of like using the reverse mortgage in the last resort. This fellow that I did the loan for, he could have set this reverse mortgage up much sooner in life and not had the big payments for quite some time, but he did it kind of as a last resort when he ran out of money. But that's not necessarily the best strategy on how to use it.
So let's talk about a couple of the other ones. So as we said, there's a lot of different ways of using it, and this one is probably geared towards people in the financial world, the financial planners, advisors. It's something that we try to explain to them and let them then understand that reverse mortgage can be a wonderful tool for financial planning for their clients. And if utilized correctly, their clients will have more assets longer throughout their lives by utilizing the reverse mortgage. And we'll explain how that works. Assuming a client has a home and at a certain age they're going to get 40% of the value. And I'm just going to use round numbers. $500,000 home, they're going to get a $200,000 reverse mortgage. That reverse mortgage, and they don't need the money, but they want to have it set aside for the future. So they can take that $200,000, we'll put it in a line of credit, and that line of credit will grow at whatever the interest rate is. This is a benefit of the FHA insurance. It's a benefit of the reverse mortgage, that money will grow untaxed, okay, right, and be available to the homeowner at any time that they need it. And so, and it'll go up. And if today's rate is 6.5%, then that $200,000 next year is going to be $213,000 value that they can draw from. In the following year, it'll be $227,000, and it'll keep going up and up. They can go in and out of that money whenever they need it. If they need to draw some of it, they'll draw it out. If they don't, it'll continue to grow. And it could actually exceed the value of the home, right, which is really amazing, that line of credit could be really a benefit down the road. Say if somebody did this earlier in their lives when they were eligible, and they had this line of credit growing for the next 20 years when they may need it for health care or for modifying their home, or maybe just because, I don't know, they might want to buy another home somewhere else. Right. They could do that. And so it provides the opportunity to set aside money, have that money continue to grow, so to speak. They have access to more money every year, and they can use it at will. Regarding the financial planners, Why does that make sense? Well, let's say that people have some investments and they're counting on their investments earning something each year. And let's just say that through whatever their fixed income is, their investments are generating another $30,000 a year. Well, all of a sudden something happens in the world, markets change, the stock markets and wherever they were investing in are not providing that income. They still need that to pay their bills and their other things. So what do? Well, they would typically, you would think, some people would say, well, let's just sell some of my assets so we can continue to live properly. Of course, when you do that, you've eliminated the opportunity to have those assets continue to grow and to continue to be used in your retirement later on. So what we suggest to the financial planners, and they get this now, is that they utilize a portion of the reverse mortgage from that line of credit to replace that money that they've lost from the income that was generated from the investments for that period of time. And then when the income starts generating itself again, they can go back in and out of the investment. They can pay off the line, pay down the line, or they can just proceed and utilize time, which was going to raise that income that they're going to receive from those investments.
I mean, it makes me think of another example of one that I closed last year for a reverse. That was a financially savvy person. They were younger. They were like in their 70s, but they were living off of their fixed income with Social Security, plus they were taking like, I want to say like $50,000 a year out of their investments. They had a big portfolio and they were using that to live on and whatnot. But the strategy here is, in that scenario with that fellow, the reason he did that is for times like this, where we've seen a huge decrease in the stock market, instead of this fellow now drawing out that $50,000 when his portfolio is way down by 10, 15, 20%, instead of doing that right now, he can wait and let that recover and not take out his $50,000 for living, use the reverse mortgage line of credit that he had sitting there for that year, for what he needs for that year, wait for his portfolio. The market always recovers. It always, goes back up. So he comes out way ahead in that scenario, even though he has a balance of $50,000 on his line of credit. The money that he was able to recover and not use when the market was down is going to far offset that over time.
Precisely.
Yeah.
We can model this. I mean, we can model it for customers and we can show them, through amortization and through all the other things, that using a blended form of their investments with the line of credit, they will have more money longer, by doing that than by, a lot of times the old conventional wisdom was you spend down your investments and you save the home for last. Well, home equity is a wonderful thing to have, but if you can't spend it, it doesn't do a lot for you, right?
And it's tax-free.
Absolutely.
That's the other thing.
It's the best
thing. Your investments make money, you're going to tax on it, right?
Yeah, absolutely.
Your home goes up in value, there's no tax there, basically, right?
That's right, yeah. And so when we say that, you can draw this money and it's completely tax-free for you to use now, I mean, so, okay. So we've talked about a couple of different things that we do. One of the things we haven't talked about is how you utilize it in the real estate business to maybe buy that second home that you want to do. And the same scenario is that way. You're using these funds.
Or to downsize.
Or maybe to downsize.
Right.
Or, for our realtors out there, we want them to know that they can help their clients buy a home, right? Buy that downsized home or that right-sized home,
right?
Or the home in Florida or Arizona or California, wherever they want to go, right? They can have people use this asset for a portion of that, or if they sell this home, they can use a reverse mortgage for a percentage of the home that they're buying. So how does that work? Let's say they're selling a home here. We'll use the $500,000 example again. They go to Florida and they want to buy a home. Well, it used to be they'd buy a condo for $200,000 or $250,000. Well, maybe now it's $7,000. Okay.
Yeah.
It's kind of the way it is.
Yeah.
So, but they have $500,000 and they don't want to go into other savings to pay for the home. What can they do? They can use the $500,000 that they have, which was the proceeds from their sale, and they can get a reverse mortgage for essentially, depending on their age, 40-50% of the value of the home. And let's just say it's 40, it's $700. You get $280,000 that way. So if you can do a reverse at $280, They can take $420,000 of their other, keep $80,000 in their pockets for whatever, decorating, whatever they want to do, and not have a mortgage for the rest of their life on their new forever home.
Just HOA, taxes, and insurance.
Of course.
Yeah. So there's been people that have said to me, "Oh, I've heard of people that lose their homes with reverse mortgages," and I just kind of go into that because there's been a lot of changes to the reverse mortgage program. People thought that like HUD or the lender was just taking people's homes and foreclosing. What ended up happening was like in the 2008 era where the markets were down. People were losing on income and stuff. Taxes were still going up and things like that. But what happened was there were some seniors that weren't making their tax and insurance payments on these homes, and that's one of the triggers that makes the loan come due, is that we always have to make sure your taxes and insurance are paid on the house. So what was happening is the seniors weren't paying their taxes, and that's how their homes were being foreclosed upon. Now we've changed the program dramatically, in that we absolutely make sure that the taxes and insurance are going to be affordable, and the senior will be able to make those payments. You would assume they can if they had a mortgage before and they were paying it before, but now the program's changed a little bit, right? So that doesn't happen.
Well, it has, and I mean, and in some cases we can build them into the system too. So, in other words, we can earmark some of the funds that they're receiving from reverse mortgage to be set aside to pay their taxes
for the rest of their
for the rest of their lives.
For the rest of their lives.
I just did one. At an 84-year-old gentleman, another war veteran, lived alone, lived in the home for many, many years, alone. And, he had another property that was kind of, he wanted to remodel it, and he got to an age where it was harder to remodel it. So he got behind. He got behind on his mortgage, and he needed something else. We were able to replace his mortgage with a reverse mortgage, which requires no payments, obviously. But in addition to that, we were able to do it in such a way that at 84, have his taxes and insurance also figured into the equation. It's called the life set-aside that we did. And the life set-aside provides that those taxes and insurance will be paid throughout. So now he can live on his fixed income and without worry of paying principal and interest, taxes, or insurance. And so the money he has, he can use for himself, his health care, or whatever else he needs.
That's great.
So, there's so many benefits to the reverse mortgage, right? Whether you're a realtor, whether you're a financial planner, whether you have a mortgage, whether you don't have a mortgage. All I'll tell you is that we're so flexible with the mortgages we have. There's even a new product right now that didn't exist before. In fact, it's brand new in Illinois, and it's a reverse second is what it is. And this is designed for people that we're fortunate enough that over the last couple of years, Jerry and the other forward loan officers, had people. We're able to get them into mortgages, get you into mortgages. There were
2.875%. Yeah, so they don't want to pay that off.
They don't want to get rid of that. It's like, wow, I mean, it's like free money. I don't want to pay that off to get a new loan that's going to replace that interest rate.
Right.
So now you can. Okay, now you can. You can keep that mortgage in place with its really low payment, which most people can handle because it's a 2% rate, 2.75%.
Taxes and insurance are usually included in that, so they'll take care of that.
So, and now you can get a reverse second for another incremental difference there if you perhaps were looking for some additional cash flow for some things that you want to do. And again, whatever it is you want to do with
and it's a line of credit. You don't have to use it right away. It's just there if you need it, right?
Absolutely.
Yeah. Right.
And that's brand new to Illinois this past month.
And if you draw on that line of credit, you never have to make a payment on it unless you want to.
That's correct.
Right.
That's correct.
Pretty amazing stuff. I just had another recently. An older fellow that came in, and he was getting divorced, unfortunately. And he was ordered by the judge they had to sell the house or split that, give her half of the assets of the house. And he couldn't do a cash out refinance to obtain the equity he would need to pay her off because he was just on his fixed Social Security income. So there's no way for him to keep his house, and he really wanted to keep his house. So I was able to come up with a solution here with using the reverse. in that scenario for him to do a reverse mortgage. She has to be aware of it too. They both have to go to counseling, and they're fine with it. But the proceeds from that reverse mortgage then will go to her. He's going to be buying her out, and then she's going to be quitclaiming herself off of the title of the house. But now he gets to live in the house for the rest of his life with no payments except for his taxes and insurance. And he was able to keep his house rather than being forced to sell it.
That's creative, very creative.
Yeah.
And I would say that you're one of the few loan officers that understand, the various different nuances of a reverse mortgage, because there are many. I mean,
there's so many different ways to use it. You could, if you're really well off and you just want to use it to, buy other real estate. I mean, you do have to live in the home that you're getting the reverse on. But say you have a lot of equity here in a home in Illinois, or you don't own much at all, and you want to buy a summer home in North Carolina or Florida, you can make a cash offer by utilizing reverse mortgage here on your home here, taking that check and just buying a house cash in Florida. Now you have two homes that you don't have to make a payment on.
Right.
You have no payment due here on this house, and that house is paid off.
Yeah.
It's a really good way to set up retirement and nest egg, and there's just so many different ways to use it. It's really astounding that not more people know about it or are afraid of it for some reason. Some other things in the past that have changed. So I've heard realtors say when they did have those situations where taxes weren't paid and houses were being foreclosed for tax sale or whatnot, or they had to be sold short or whatever. Realtors had problems with the short sales for reverse mortgages. I think they fixed that too.
They fixed it. I mean, First of all, there were some things that needed to be corrected over the years.
Right.
The youngest of the borrowers are the ones that are a reverse mortgage is based on three different things. Okay, it's based on the appraised value of a home. It's based on the prevailing interest rate today, right? And it's based on the age of the youngest borrower that's entitled in the home. Okay, so in the past, pre-2017, before there were certain reforms, you could leave one or other of the spouses off of a reverse mortgage. And oftentimes it was because the elder of the two was getting more proceeds from the reverse mortgage, so they left the younger one off the mortgage.
Right.
The unfortunate thing is that sometimes what happens is, and it did happen, is that the older party who was on the mortgage passed away, and then because the other spouse wasn't on the property, on the mortgage, the loan became due.
Okay. So that she had to refinance it herself.
She had to refinance or sell.
But they fixed that completely.
So now you can't do that.
Okay.
If you're married, if you're both untitled, you both have to be on the loan.
Okay.
And that's a safeguard for both parties, right? That's a big thing. The other thing is we can't write a piece of paper. We can't do an application until you've had counseling done by an independent HUD counselor. Right. Now, it's not a big deal. No. It's typically done today over the telephone.
It's very informative.
It is. Sure. Yeah. That when we do a loan, we provide a proposal to you with all of the things involved in the loan. We provide that same thing to the HUD counselor who goes over it with you, and he gives you an independent analysis, basically, make sure that we've told you everything, right? And
your family's encouraged to go to that as well, not just, if you want to have your heirs involved in that counseling session.
Yeah, financial trusted advisor, banker, lawyer, whomever, I insist when I can, when it's available, that a borrower has some representation from someone other than just themselves. A family member, a child, somebody. Right. So they understand. And it's very important, I think.
Absolutely. Yeah. Well, I want to thank you for coming out and joining us here today and giving some education to everyone about the reverse product. It's also called a home equity conversion mortgage. I don't know if we said that. We might have.
I think you did. You've really got it down.
I appreciate that. Well, I've been doing forward mortgages for 23 years, and like I said, my dad retired from reverse mortgages. He was doing reverse mortgages for over 25 years. So I guess you hear about it at the dinner table when you're, and stuff like that. You learn stuff here and there, and you learn scenarios of the way people have used it. And it's pretty awesome product, I think.
Well, it's one of those things. I actually learned about the product maybe 20 years ago. I wasn't in the business. I wasn't in the mortgage business. And it was frankly, it was for my parents.
Mm-hmm.
And they, had, my dad had a business that closed the business, and what he had relied on from the business to pay certain expenses and things, which the business always paid for, all of a sudden weren't.
Right.
And I said, maybe, you might want to think about this. I've heard about this reverse mortgage thing. And so my parents did this, and this is like 20 years ago, right? And so they did a reverse mortgage, and it turned out that the value of the reverse mortgage was worth more than their home because they didn't draw any money from the reverse mortgage.
Okay, yeah.
And my father lived, 20 years after he had the reverse mortgage. Okay. So it had that ramp up, right?
Sure.
And so it was kind of funny because now I got into the reverse mortgage in subsequent years. And a couple of years ago, Dad would be in the car and I would get a phone call about a reverse mortgage, and he would listen to me a little bit because he's my dad. I mean, it's normally not something you'd share, but
right.
And people would tell me their scenario on the phone, and he would hear it. And the first thing he would turn to me, he goes, can you help them? And I'd say, well, yeah, I think so. He goes, I really think I didn't use that, but it was awfully nice to know that it was there just in case,
Right.
And so it's something we don't talk a lot about, but it's a peace of mind too.
Yeah.
I mean, where you can turn some of your equity into ready, available cash when you need it.
Mm-hmm.
And you don't ever have to worry down the road about qualifying for those funds.
Right. I think it says a lot that 40 years worth of experience of originating loans, reverse mortgages, and both of our parents have a reverse mortgage because my parents live in North Carolina and they have a reverse mortgage in their house. So it just gives people so much peace of mind. You don't have to worry about making that payment if you don't want to. You can if you want to.
Yeah.
And it's just a really good way to utilize the equity in your house tax-free, in my opinion. And for us being mortgage professionals and both of our parents having it, you can kind of see that it's a product that not a lot of people know about, but the people that do know about it and know how it works are using it.
Well, and I think that's really a great statement. Reverse mortgages they're just one of those things that people always have questions about. Yeah. And honestly, most of what I do and you do is we give them answers to those questions.
Education.
I mean, we educate you, right? Mm-hmm. And we educate, whether it's financial planners or realtors or individuals or families or whatever. It's so you understand the product. Because right. I think once you really understand the product and all of the benefits that they provide, it changes the dynamic. And listen, they're not for everybody,
no,
okay?
No.
But more and more, there are 80 million people right now that are qualified for a reverse mortgage that have more home equity than they've ever had. And it's just another tool to maybe live a little bit better.
Right.
And that's why we do what we do.
Absolutely. Well, again, thank you for coming out again. I know it was kind of a long drive to the branch here, but if you ever want to come back again and do another episode of the Achieving the American Dream podcast, we're here to host you. So we appreciate you coming.
Thank you, Jerry. It's always a pleasure.
Thank you so much.
Thank you.
All right.